Good morning. It's September the 1st, 2016. Time to kick off the end of the quarter month, end of the third quarter in September. The economic news that we get this month will set the tone for GDP, non-farm payroll, whether the Fed raises interest rates or not, and the first big piece of news we have will be tomorrow's non-farm payroll number. And if it comes in higher than forecast right now, they're looking for 185. Then more ammunition for the Fed being able to raise interest rates this month. Again, I don't believe that'll happen because of the presidential elections, but you never know for sure. You can't predict the news with 100% certainty. So, here we sit. Today is the first day of trading for the December contract for us. It actually rolled yesterday. We didn't roll our data over until today. I'm going to talk to Chris about that. The market right now, you can see that 28 to 31, 131 even is where resistance is. And it is trying to trade lower. Given the fact that tomorrow's non-farm payroll number has such import on what's coming and what will happen, it should tend to hold the market in a trading range. And a lot of the puts were covered yesterday, so some big bets were being placed yesterday that the non-farm payroll number would come in lower than forecast. We have news this morning, jobless claims, 265. Productivity, non-farm productivity, minus 0.6%. That seems to be the default number. Unit labor costs up 2.1%. Seems to be the default number, plus 2%. PMI manufacturing 52.9. ISM manufacturing 52.2. Construction spending plus 0.6. That one's never hit. And nat gas inventories plus 38. The market's focus, ISM manufacturing, right there, and that comes out, I believe, at 10 Eastern. So we'll have a while to wait for that. So the first piece of news that's going to hit the market is jobless claims, but that's the default number. Nobody will pay any attention to unit labor costs nor productivity. Natural gas traders will pay attention to the natural gas inventory. So resistance starts at 28. We do have a P TPO-wise, but volume is at down below. So 21, 27, 31, sell 1, 3 to 5, 3 to 7, sell 2. On the buy side, 16 to 20, buy 1, 9 to 13, buy 2. If the E-mini sells today, and all news services are carrying stories about how September is a very unkind month for the stock market, then we can get more buying in treasuries. Again, the last 2 days of the summer, the volumes will start to come back next week. Hopefully volatility too. Definitely a B, and we did break it in the 30-year, but it's coming back a little bit. So we've got resistance basically at 170. So 170, 170.04, number 1. So 7 to 11, sell 1. 19 to 23, sell 2. Playing for a trading range market. 20 to 24, number 1. 13 to 17, buy 1. 1 to 5, buy 2. Gold was pretty quiet overnight. Trying to trade lower, so stops below 1300. Maybe stops. We stopped it at 7, that low volume number again. So 5 to 7 buy 1. 1300 plus or minus buy 2. On the sell side, 13 to 15 sell 1. 18 to 20 sell 2. Again, my guess is trading range today. Looking at the euro. Trading range. So 75, 65, 75, sell 1. 90 to 112 even, sell 2. On the buy side, 30 to 40 buy 1. And then 111 even, 111.10 buy 2. I forget what the date of the interim OPEC meeting is in September. I think it was September the 8th, but I'm not sure. But it's just pretty hard to see that if Iran's not going to participate, that anything can come out of it. Now, low volume numbers are support and resistance in this. So we've got 45 is resistance, so 44.75, 45, sell 1. 45 and a quarter, 45.50, sell 2. And generally speaking, if we get into these single prints right here, we should be able to make it up about halfway right in there, and that would get us close to 45.50. On the buy side, the high volume numbers down here is 44.10, and I got a low volume number at 44, so 44 and a quarter buy 1, 43.50, 43.75 buy 2. Okay, the E-mini, probably another fairly quiet day, maybe 10 points, 12 points on a big day. We're really stuck with less than 5 points for that first hour of trading usually. If it moves in the first hour, then it dies after that first move for a couple, 3 or 4 hours, where we don't get any movement either. So getting the trade right on the opening is pretty important. So 75, 77, sell 1. 79.81, sell 2. On the buy side, 65, 67, buy 1. Play for a trading range, and then 60, 62, buy 2. Yesterday, finding that market number, usually at our number 2 level. Yesterday it was at our number 3 level. That held. That got you pretty close to 10 points if you held it through the close. The day before that, the 2170, I think, got you 5 to 6 points if you held it. Got in over lunch, after lunch, and held it to the close. So it's the same principle that we're dealing with the opening. Get the direction right, ride it out for a while, and that's a shot at 7 to 10 points. The normal trading doesn't work because the Fed will not allow the market to sell. And if you don't have a two-sided market, it's really hard to get players to come in. And if there's no volatility, it makes it even more difficult. And we face both of those conditions on the market these days. Okay, it will take a bit to get everything up and posted. I'm going to get busy with that. I will be back with you as soon as possible.